It's March 17th midnight, and like every day, we are here again. So what happened? Market opened at 12 a.m. That's where we start our daily range. Market took a short-term low and then climbed higher. We had a news at 8:30, so we did not participate before 8:30. It took this initial lows before, initial highs before 8:30. Then 8:30 news sent the market higher. Then main show starts at 9:30 here. This big green candle or positive candle. I have it gray here. So market opens here. It comes down to the consequent encouragement of opening range gap RTH. Usually if the gap is bigger, it should dig into 50% by leaving a first presenter fair value gap, retesting it or something, but the gap is smaller and it just made its way in just one candle. Then it climbed higher. My bias was still kind of short-term bearish because we had some sell side here. I was also looking at that 4-hour fair value gap above it, like the final draw later on, but in the morning, as I'm observing, my bias is changing because it's just gonna be a short trade in the morning. Market plays with this fair value gap, climbs up, down, seek and destroy kind of conditions. Then at around, actually I was just practicing trading today. I did not take any trade in my account. So here I marked a short trade here with the stop loss just above this inverse fair value gap, and I was targeting a 9:30 low. It delivered there, then it went up again, came down, taking the low again, market structure shift, and the fair value gap, premium fair value gap, market climbs up to there. It's kind of a silver bullet thing. Market structure shift, market climbs up to first presenter fair value gap, also overlapping this fair value gap's lower half, comes down to 8:30 lows here. So our sell side business is almost done. Now we have something to explore on the higher side, 4-hour. So after that, what was the time where it was 10:50 to 11:10 macro. It played out nice, took out one side of liquidity, that was sell side in this case, and also closed the gap fully. After that, it was just seek and destroy for lunch hour. Lunch hour macro just consolidates, rack up orders for a run higher or lower. So after lunch, let's see, 4 hours. So now we know in lunch what happened is this long wick down, it's when the market opened and came back down to take 8:30 lows. After that, it again took this short-term sell side. That's how the wick was made. Now if we look closely, we don't have any fair value gap in this run higher, so there's no point of it coming back down here or anywhere. But it also filled this inefficiency when it came down around lunchtime. In 1 hour, we had this buy side imbalance, sell side inefficiency that was filled nicely around, no, not this, sorry, this buy side imbalance, sell side inefficiency, this was filled by 11 a.m. candle, also digging into this inverse fair value gap. It did not like close below this, so we know it's not gonna go lower here. It closed above it, and the next candle rejected the 50% consequent encouragement of that gap. That's our signature that it's gonna go higher. Look at that. and also nicely rejecting the high of it, and the next candle and the very next candle sends it higher. 30 minutes our 12:30 candle closes above this. That's a change in the structure. Then, as Dasha says, we're gonna go to 3 minutes. As the structure changes in 3 minutes, we have this small inverse, climbs up, comes down again, and climbs up. This, I don't like this setup, to be honest. So we go to 2 minutes. Now we know it's gonna reverse. Now we saw 1 hour candles closing above that fair value gap. Now we know there's a potential reversal. What else is there to confirm our reversal? SMT, boy. ES was showing strength. Look at that. 11:30 high is higher than the previous low. Sorry, 11:30 low is higher than the previous low, but Nasdaq took out the low. That's a clear SMT here, a sign of reversal. Then I like 1:30 time to trade for afternoon. There's 1:30. Remember, market leaves consolidation, aggressive run up, breakaway gap, institutional order entry drill, something like that. Here, boom, targeting these I first for one partial. If we enter here on the next candle, these eyes first for one partial, 57 handles, and these eyes for another partial, 87 handles. And if we have another runner, we could send it to 50% of that 4 hour fair value gap, 108 handles. That was worth waiting. That was surely worth waiting. Then after the market is around here, we don't want to take a trade because it's exploring a new area of interest. After that, it just closes the 4 hour fair value gap. After it closes it, the objective is complete. Now we want to see if it want to climbs up and retest it, or if it want to reject it. Again, for reversal, we would see for any SMT. We'll go 1 minute here, 1 minute here. As market fills up fair value gaps, both the markets were in sync, ES and NQ. And there we see a SMT. That gave me an indication that there's a reversal, and I took a paper trade. See the bodies. I took a paper trade, a short-term market structure shift, not a very good one, but short-term. This 1 minute swing low was broken. We have inverse here. We take a trade here, boom. And after these major lows are broken in 2 minutes, that's a more secure setup. But like Lumi trades say, 2 minute confirmation, but I'm okay with 1 minute actually. 1 minutes are not that great as they tend to fail. It's just a small sweep on liquidity, could not be a market structure shift, but we had SMT. That's why I was confident, and we had already reached a certain level, so it was obvious for it to retrace. And also one more confluence, it was closing macro always go opposite side or takes opposite side of liquidity before close. It's always opposite run. 2 minute change in state of delivery here. Then what kind of fair value gap we have? This one, body staying in a stop loss would be above this candle, boom. With the same setup in mind, like 2 minute market structure shift, after that we can find fair value gaps in 1 minute. See that? I took a paper trade here, boom. Market was really good. There was no signs of fear and no signs of greed, as I was not actually trading. I was just simulating my trades. That's what I want in my live trading. So I'm just gonna patiently practice day after day, repetition after repetition, and completely remove the idea of me making big money, like, because that idea creates fear and greed. I don't want it. Obviously I want money and everything, but I don't want the idea and price money to influence my trading, to influence my mentality when I'm trading. Because in trading, it's not boxing. It's not like the more aggressive you are, the more chances are there for you to win. It's trading, it's meditation, it's it's a religion. But there's no hope and pray set up in it. We have to be control. We have to be the next major entity to God. It's not like we pray for a setup, we create, we fade a setup, we actually guess it, we forecast it. That was everything for today. Peace.